So guys, I'll just do quick analysis on on 5 pairs: AUD USD, Euro USD, GBPJPY, USD CAD, and AUDCHF. So I'll be starting with AUD USD. So from AUD USD, the market is in overall downtrend. From the monthly time frame, we are in overall downtrend. So checking the candles, like I already have my zones. I already have my weekly zones, monthly zones, which is in red. Then my weekly zones are in blue. So, and the market is currently testing monthly support level from here. So even if we are in a downtrend, we are testing monthly support level. So we need at least bullish price action. So for now, selling the pair from the monthly time frame is not a good idea. Even though we have something like triangle formation. See, we have something like triangle formation. From here, again, we have this one right here. Yes. So it has something like triangle formation. So technically, we are in a range inside of this triangle. Now, this simply means that if we manage to break below, if we manage to break below this monthly zone, then that means we are heading to this weekly support level here. So for now, selling the pair is not a good idea because of this monthly zone and this trend line here. So at least we need some kind of bullish price action before moving to the downside, even though we are in a bearish trend. So heading to my weekly time frame. So here on my weekly chart, like the last analysis I did, I told you guys that AUD USD will retrace to the 50% retracement level, and many people are selling the pair and they are just hitting stop losses and all that. So on the weekly, let me do it in a way you will understand. So on the weekly is overall downtrend. Remember, the weekly is overall downtrend. That's we are in a bearish move, and we are currently in monthly zone. Any red zone you see in my chart is monthly zone. Blue zones are weekly zones. So we are currently in a monthly zone, and for the past how many weeks? For the past 1, 2, 3, 4, 5, 6. For the past 6 weeks, that means a month and 2 weeks, we have failed to move below this monthly zone. So this is a very strong support, and once we break it, first target level here, then the second target level to the downside. Now currently I'm not looking at selling this pair currently, because one, remember, the market moves in waves. Even though we are in a downtrend, the market don't move in a straight line. So we move down, correction, move down, correction, move down, correction. So even if you're in a downtrend, always expect corrections before selling again. So, and for this move, we expect correction to at least to the 50% retracement level of the Fibonacci. So you can understand that here we move down, move up, move down, move up, move down, move up, move down, move up, move down again, move up. So this simply, for me, what I'm expecting from this market now is I'm not selling the pair for now, because the weekly time frame now, you can see this move, we need a correction before moving to the downside again, and the correction, for valid correction, we need the market to retrace to at least 50% retracement level, or 50% retracement level. So if I put my Fibonacci from the high to the low, this is the 50% and 0.618. 50% and 0.618. This zone here, boom. Then I'll just add it to my fib level. So this is my fib level. My weekly fib level is this one, and also we still have another level. Here. Yes. So I have 2 levels now that the market should respect. Now, from the weekly time frame, the first level that now I'm only looking for selling opportunities. I'm not looking for buying opportunities for this pair. Now, if the market gets to this first level here, which, like, if I draw my Fibonacci now, this is the 0.382, which is also a valid retracement level. Now the market now, this, I have this resistance from here, so the market can resist it, or even get a week of this, or even get a weak rejection from the 50% retracement level on the weekly time frame. So if the market give a correction, then you enter again for another sell, because selling here is like, this is just a ranging market. So let me go to my daily time frame and see what I have on the daily time frame. So this is the daily time frame. Daily time frame is just in a range. So if I decide to box it, to box the range, this is what I'm going to have this box, and yes. So the daily time frame is just in a range, just consolidating. No move down, no move up, just move down, test it, come down, test it again, come down. So the daily time frame is just in a range, a ranging market. So I'm only looking for selling opportunity, and I know what to do once I see the market moving down. So for now, AUD/USD overall direction is bearish. Short term might be bullish because we might get a breakout to test one of these zones before moving to that. And if that happens, then I will enter for a sell. First target, second target to the downside. So for now, AUD/USD is out of my watch list for now. So the next pair I'll be taking is I'll be taking EURUSD. Yes. For now, I think I like the price action I'm seeing on EURUSD. So this is my EURUSD chart. So I'll be starting on the monthly time frame, like I always do. So on the monthly, we are in overall downtrend, overall bearish trend on the monthly. Overall bearish trend on the monthly. So currently, we are currently testing my monthly level, my monthly zone, monthly support level, which is monthly support level reacted here, breakout again, retest. So currently we are in support level, and once you're testing support level, we need to see bearish moves, the bullish move on it from a support level. But something happened on the monthly, because I was expecting this market to come from here. Like, I bought this market somewhere here and target this upside, but this monthly candle here, like this rejection, this is a reversal candle, and once a reversal candle happens on the higher time frame, don't even think of going against it. So you can see how the market is just moving down. So all this while just moving down, and it's currently in a support zone. So for the past how many months? For 1, 2, 3, 4, 5, 6, 7, 8, 9. For 9 months, we are just inside of this range. So currently, maybe some kind of bullish price action might occur from this zone. Then going to my weekly time frame. So what I like to see on my weekly time frame is chart patterns. And for my chart pattern on the weekly time frame, just around here, I'm just sensing reversal, changing direction to the downside. But you can't just sell. Remember, you always wait for move correction before you sell. So even if I'm selling this market now, I will see a rejection from the monthly time frame, giving me a head and shoulder pattern, which is a reversal pattern for me to sell. And I won't sell because the market is giving me a reversal pattern. I'll wait for the break of the neckline, which is here. Once that break comes, then we are bleeding to this zone down here. Then, so from the weekly time frame, what I'm just expecting is, if the market should retrace to the upside, then I need a retracement to at least 50% of my Fibonacci level. So if I draw my Fibonacci from this high to this low, you can see where my 50% retracement level is. This is my 50% Fib level. This is my 50% Fib level. So the market is overall bearish, but short term, I'm expecting bullish move to go and test at least this zone before moving down again, giving us a head and shoulder pattern. And if we also take our trend line, our weekly trend line, if we take our weekly trend line from this low all the way to this high, so we are currently trading below the trend line, meaning that we break below the trend line. And remember, according to the technical rules, once you break trend line, you expect a rejection. Now you expect, it's not a must that the rejection will come. You expect a retracement to retest that same trend line. So you can see that everything now is just pointing to this zone, because you have the trend line retest and the previous support turn resistance, which is this zone here. So the market short time will just move up and get a test of this zone before moving to the downside if we are to sell the pair. Now going to my daily time frame. So this is my daily time frame. So on the daily time frame, let me just reduce this. Yes. So on my daily time frame, you can also spot a kind of reversal from the daily time frame, but not that. It's not that. So let me check if I want to put in here. Is this a fake out? Yes, they are currently testing overall support. So on the daily time frame, I'm not looking for selling opportunities again on this pair, because one, we are testing monthly support level, so we need a bullish price action to come in to the game. Now remember, from our weekly time frame, we are expecting the market to at least retrace. Just like the market will not move in a straight line and go and retest this level, it should also move. Then once we get a test of this zone, once we see something like this inside of this zone, then we now have head and shoulder pattern. We now have head and shoulder pattern. So once we retrace here, we now have head and shoulder pattern, meaning that we have our head, shoulder, and we expect the move. Now you don't sell because you are seeing head and shoulder pattern, or you don't sell because the market is giving you head and shoulder pattern. You always wait for reasons to enter. Like my entry strategy, I know how to enter. Once I put it, break, enter, stop loss, TP. That's all. So for now, on the daily time frame, what I'm expecting the market to do on the daily time frame is, since we got rejection from this daily time frame from here, this daily zone from here. Now I'm looking for buying opportunities, short-term buying opportunities, not selling opportunities anymore. Now we rejected these levels with weeks, 2 daily candle, 2 weeks, rejected this zone, and we have a break. Remember, this is not a change in direction yet until we break above previous high. So until we break above this level, this daily level here, is not a change in direction. We expect bearish price action until you break above this zone. So if the daily time frame will break above this zone here, give me a nice correction, then I'll get in early from here, then hold my trade all the way to this level. Now I might not hold it all the way to this level. I might hold it like 20 pips. Maybe my TP will be somewhere around this zone, but I'll patiently wait for the market to give me that move correction again, giving me a double bottom from here and breaking above the previous and retesting that same previous resistance turn support, telling me that the market is changing direction temporarily to the upside. Then I'll just get in early here, 50% position, close at the 100% adjustment level. The remaining 50% run to this point here, then I'm done. So this is what I'm expecting for EURUSD now. Like the overall trend is bearish, but short term I'm expecting bullish move to get to this level, at least this level. So the next pair I'll be taking on is I'll be taking GBPJPY. So this is my GBPJPY, and this is my monthly time frame. So I already have my monthly zones marked out. Now I'm expecting this market to come to this resistance zone here. This is my overall target, this resistance zone from here. But on the monthly time frame, we are currently seeing a kind of rejection from this zone. So if I put my zone, you will see that the market is just reacting to previous levels, like previous price action. So if you check here, we got something like a head and shoulder pattern from here. You will see it clearly on the weekly time frame. That's why you see the head and shoulder pattern clearly. You see the head, shoulder moving down. So the market is currently reacting to this zone here. So currently now, but I'm still expecting bullish price action to the upside. So heading to my weekly chart, and now even if I see a bullish setup, the reason I'm not going to take this bullish setup is because of this monthly candle, this bearish engulfing monthly candle. Now we have 6 days for the candle to close. So if this candle close with bearish engulfing, like taking out this bullish candle here, I'm out for a buy. I won't be looking for any buying opportunity. Any buying opportunity I'll be looking at now will be based on fundamental analysis, because my technical is already bearish. Because if this candle should close bearish, that means there is possible change in direction. So let me go to my weekly time frame and see what I have. So this is my weekly time frame, and on the weekly is a kind of impulse and correction, like giving us an impulse and a correction. So remember, the monthly overall, like the weekly, we have this trend line here, this trend line. So on the monthly time frame now, if I'm to put my Fibonacci, it will be from this low to this high, and the 50% Fibonacci we will have is this level here, for the 50% adjustment level. Now if that monthly candle close with bearish engulfing, there is every possibility that we are coming down here. And even if it closed bearish, I'm not going to sell this market to this point, because I'm going against the trend. Overall trend is bullish, so selling is going against. I will comfortably wait for the market to retrace, then start looking for buying opportunity and hold my trade all the way to this upside. But for now, I will tell you the reason why selling opportunity is not advisable for now. Now, if I'm to this is my weekly time frame. Remember, the market is moving impulse correction, and all that. So this weekly we have this impulse correction, another impulse, another correction. So if I'm to take my Fibonacci from the weekly time frame, take my Fibonacci from the low to the high, checking where the market will come into. So if I to take from this low to this high, remember my 50% retracement level. So this is my 50% zone. The market is inside my buy zone. 50% retracement level inside my buy zone. Now this is where I will start looking for buying opportunities. Though the monthly is showing me change in direction, but I can't go against the trend. I will only follow the trend. So if I'm to trade this pair, I will look for buying. But though it's still risky, but I will be going for a buy. Going with the overall direction of the market. So this is where I want the market to come into my zone, and the market have already come into my zone with this bearish candle. So I'll just be monitoring price action inside of this zone. Now I can't just buy because the market is inside my zone. No, it doesn't work like that. I'll just be waiting for price action inside of this zone, inside of here, just waiting for daily candle rejection. Once I see that rejection, I'll buy, set my stop loss, TP, first target, and other things. So even if I should go to my daily time frame now, I was waiting for buying opportunities on the daily time frame, but this weekly zone, this weekly pullback into the zone is more active for me. So let me go to my daily time frame. Now this is my daily time frame. Now I was trying to do something from this daily time frame. Now this is why you need top-down analysis to know what the market is doing overall, because previously if I don't go to my weekly time frame, I will use this low as my daily low, because on the daily we have this impulse correction on the daily time frame. And if I'm to take my Fibonacci on the daily time frame, I'll take my Fibonacci from here to the upside. And if I do that, that simply means that the market will just give me something like this from the low to the high, giving me this zone as my 50% retracement level. Remember, this is a very strong zone on the daily time frame, but the weekly time frame is stronger than the daily. So the market will most times respect weekly and also daily. So this is my daily. This green zone is my daily. This is my daily level. So I was looking for a buy around here. I was looking for a buy around here. Then I got these rejections, but I didn't get an entry. My students know how I get my entry, so there's no clear entry. That was why I stayed out. Now I saw the market moving down, and I was like, I go to my weekly time frame, draw my Fibonacci, know that this is my weekly 50% zone. So I'll patiently allow the market to just play around. Like, as you can see, the market is already playing around the zone. This daily candle here failed to close bearish or bullish, so the market will now maybe give me something like this inside of this zone. So maybe play around for him from this zone, then give me a perfect buy entry. Then I will enter the pair and hold my trade. It's as simple as that. So the next pair I'll be taking is USDCAD. Now this is my USDCAD on the monthly time frame. So the monthly, by looking at the monthly, we are just in a range since 2015, since December 2015 till now. We are in a range. We are just ranging inside of this zone. Just move down, up, down, up, down. So in this case, I'll just look for my trend on weekly time frame, since the monthly is just ranging. Now the monthly time frame, now if I'm to check what I'm seeing, like from what I'm seeing now, we are just seeing impulse correction, another move to the upside. So definitely from technical analysis now, like what I need is, since we are above, move up, correction, another move to the upside. But from the monthly aspect now, we have something like a flag pattern, in the sense that market move up and is currently retracing. Let me change it to 7. Yes. And if I to take my Fibonacci, let me measure the overall move. Measuring the overall move. So we are not in the 50% zone yet, and I can't possibly say that the market must come down to this zone. I can't possibly say that. No, you act based on what the market is showing you, not what you think. Trade what you see, not what you think. And even if I should take this monthly zone now, you see that the monthly. Let me remove this color from here. Let's reduce it. Now you will see that the monthly zone is giving us a kind of CTL, meaning the counter trend line, something like this. You see that the market is just in a range, like some kind of flag pattern in a range. Inside of this flag pattern, just ranging, and it's currently moving down. It's currently moving down, currently moving down. So this means that if this range continues, maybe the market will just come down again, come up, come down, move up, move up, then get to this zone. I'll start looking for buying opportunity. But on the monthly time frame, this is not what I look for. I only look for candlestick patterns on the monthly time frame. So candlestick pattern from the monthly time frame, we have a, like last month we have a bullish engulfing candle. We have a reversal candle from here on the monthly time frame. Reversal candle, then this bullish candle followed by this bullish. Now this daily candle, sorry, this month candle is a kind of indecision candle. So anything can happen at this point. We can also break above this zone, but if we manage to break above this monthly level here, if we manage to break this monthly level here, then that means we are coming to this zone technically. So heading to my weekly chart. Now heading to my weekly chart, the same thing I saw on the monthly time frame is something I will also see on my weekly chart. This counter trend line from here, and also this one from here, just in a range, and if I'm to take my Fibonacci on the weekly time frame from low to high, we just get a touch of that 50% retracement level. So which is this zone. Remember the Fibonacci will always align with zones. It will always align with zones. So if I'm taking out my Fibonacci level now, you can see the 50% retracement level, which is this zone here, and the weekly, this week's candle just come and give us a rejection. So now I won't be taking, like, I won't be looking for buying opportunities or selling opportunities for this pair. I'll just patiently stay out of this pair. I'll patiently stay out of this pair for now, because we are just in a range. We are just in a range, and even if I'm to no, I'll just stay out of this pair for now until I see a breakout of this zone giving me a pullback. Then I will know that nothing is stopping the market again. I'll just hoping for a buy. So the market can easily come inside of this zone, just consolidate, and after consolidating, if the market gives me a valid entry, I will execute. Then heading to my daily chart. So this is my daily chart. The daily is a kind of complicated for now, and it's currently giving us a bearish move from this zone. So from the daily time frame, we got a rejection from here again, breakout, test it, move up, move down again, break below it, test it again. Now from daily time frame, we'll be expecting some kind of selling opportunities, but that's why I said I will stay out of this pair for now, because everything is just consolidating. Because before I take any trade, monthly will be bullish, daily bullish, and okay, monthly, weekly, and daily will show me the same direction. But in this case, monthly is giving me a bullish setup, weekly bullish again, then daily is giving me a sell, because you can see we are below resistance. But the overall direction is still bullish, if you can see. But we are currently in a range. Even the daily time frame is just in a range. So I will currently stay out of USDCAD. So the next pair I will take is AUDCHF. So this is my AUDCHF chart. Starting on the monthly, everything is bearish to the downside. And this month candle is currently giving us a bullish engulfing. Like everything about, like all pairs now currently, they're just giving us like negative moves, like against the trend, and it's currently giving us a nice correction. Now this month's candle from AUDCHF is just bullish engulfing, but overall the pair is in bearish move. So I'm expecting the pair to come to this zone technically. And you can see on the monthly we have this previous support turn resistance. So from the monthly time frame we have previous support turn resistance from the monthly. You can see it here. Previous support was broken to the downside, then resistance again downside. So this pair is currently giving me a very nice setup. So heading to my weekly chart, and if I extend this, you will see that this is a very strong zone, but just that I got this move from the wick of this candle. So technically, maybe even if we are reversing, at least the market should give us a double bottom from here before changing direction. So let me go to my weekly time frame. Now this is my weekly time frame, so let me remove this monthly. Now if you check my previous analysis, like my previous video on analysis, I analyzed AUDCHF when this pair was around here. Then I told you guys that this pair will pull back. I told you we are in a bullish, like we are in a bearish trend, but this market is pulling back, like it's pulling back to test this deeper, to get a deeper correction before moving down again. And it's currently happening. I think I made that analysis when the market was around here, and the market is now moving to give us a clear test of that zone. Now this is also what I was expecting from AUDUSD to do, but AUDUSD failed to do it. Now on the weekly time frame you can see overall bearish, overall bearish move. Now we did a correction before we can start selling again. So if I'm to take my Fibonacci from the high to the low, from the high to the low, you see our 50% retracement level and 0.618 falls inside of this range, so at least the market should, now we are almost inside of that zone. We are almost in our sell zone, almost. It's just about maybe 40 pips away or 50 pips away. So, and remember, we also have this resistance from here, which the market can also resist. We can also get a rejection from this wick of this candle here, which means we are currently in our zone. So everything that we're looking for this pair is selling opportunity. But remember, monthly candle bullish engulfing, so selling this pair would, like, you have to be extra careful selling this pair. So heading to my daily charts. Okay, checking price action. Like my student, if you started with me for a very long time, you will know what this pattern is. You will know what this pattern is. You will know what the pattern is, and you know what we expect after something like this. So heading to my daily. So heading to my daily chart. This is my daily chart. Now I tried selling this market from here, impatient. I tried selling this market from here. Then I know that the markets have not retraced to the, have not given me a valid entry to sell the pair. Now this is our daily charts, remember. And if you check your price action, even if I have to draw my Fibonacci from this daily chart, if I have to take my Fibonacci from this daily chart all the way to this downside, you also see that the 50% retracement level, the market is almost inside of the 50% retracement level, which is this zone from here. Yes, it's almost, the market is almost in the sell zone. Now if you watch the price action from here, you see that the bullish daily candles, like the momentum is not that much. If you check this one, you have this indecision candle. If you check this daily here, this one have more distance, more body. Now this one, no buying pressure here, no buying pressure here, buying pressure, no buying pressure, no buying pressure. Now we have this bullish move. So I'll patiently wait for the market to come inside, to just pull back into that zone. Then I'll start looking for selling opportunities from that side. Then My first TP will be this move here. Second TP will be all the way I'll just hold all the way to this downside. First TP, second TP, and I'm done. So this is what I'm expecting from these 5 pairs. Now do your analysis. If yours is better than mine, just take your trade, place your trade, and relax. So for now, I'll just leave you guys. Then next week I will also upload another analysis for the next upper week. So bye for now. Don't forget to hit that subscribe button and subscribe to my YouTube channel. Thank you.